Now we come to the next is provisional assessment. Now provisional assessment is basically, this is rarely used. I don't know whether it is being used at all, but there is a provision under section 60. Now what is a provisional assessment is if a taxable person has got a doubt regarding his value of goods or services or rate of tax. So if he has got any doubt on how much is the value of my goods, there is a confusion, or what is the rate of tax on my goods or services, he can apply to the proper officer. So proper officer will provisionally assess what is the tax, and he will tell the person to pay tax on that provisional assessment amount. So it is a provisional assessment which a taxpayer or registered person applies to the proper officer, and proper officer will determine the tax. So it is a taxable person is unable to determine the value of goods or services or rate of tax. He will request the proper officer in ASMT 01 form electronically for payment of tax on provisional basis. Officer may ask to submit additional documents. So once ASMT 01 is received by the proper officer, he may ask for additional documents from the registered person in ASMT 02. Then taxable person will reply in ASMT 03 within 15 days, and a provisional, how much tax has to be paid provisionally, will be intimated in ASMT 04 within 90 days from the date of receipt of request. So as soon as the amount he comes to know, registered person, he will remit the amount. Now, once the provisional amount is received, the registered person has to sign a bond, and he has to give a security. So generally in the ASMT 04 itself, the proper officer will tell you how much bond has to be signed and how much security has to be furnished. So generally a security amount should not exceed 25% of the bond value. Now what is this bond? The bond is basically, now the confusion of the of the registered person may be whether my tax rate is 18% or 12%. So he will approach the proper officer and he will ask, what is my tax rate, whether it's 12% or 18%. So proper officer will determine the tax rate at 12%. If it is 18%, there is no problem. But if it is at 12%, then there is a risk of that 6%. Tomorrow, if there is any difference, then the taxpayer registered person has to pay. So the bond amount will be for that 6%, and on that 6%, 25% he has to give a security. So a taxable person shall execute the bond in ASMT 05. Final assessment. So this is only a provisional assessment. Finally, an assessment has to be completed within 6 months from the date of ASMT 04. That is within 6 months from the date of provisional assessment. Again, the proper officer, if he has any doubt, he will ask for the additional document in ASMT 06. And after receiving the additional document and reply, a final order will be passed in ASMT 07. This 6 months from the date of ASMT 04, which final order has to be passed, can be extended by a joint commissioner or additional commissioner by further 6 months. So 6 months already proper officer time is there. Joint commissioner can extend it by another 6 months, and commissioner can extend it by another 4 years. So basically 5 years time is there to pass a final order. Applicant to file ASMT. So once the final order is passed, then the bond is not required because there is no tax liability. Suppose if final order is passed and there is no tax liability, then the bond can be cancelled in ASMT 08. Now, once the tax is determined in the final order, and suppose there is a tax liability. So once the tax is determined and when the tax is paid, that period interest has to be paid by the taxpayer. Suppose if it was 12% and subsequently it was decided in the final order it should be 18%, no interest will be charged from the date of the provisional order till the final order, because the provisional assessment order had that rate and final order had different rates. So interest will not be charged in those periods. Interest will be charged only from the final order till the time the amount is paid. So PO will release the bond through order in ASMT 09. And if there is any refund, suppose if any refund has to come in the final order, that also if there is a delay more than the statutory limit, government will give you interest. That rarely we see, but there is a provision in law. If refund gets delayed, that also should come with interest. So everybody would have heard of advance ruling. Now provisional assessment also is something like an advance ruling. Advance ruling also is basically, if you have any doubt, you approach the advance ruling authority. Provisional assessment also, if you have any doubt, you approach the proper officer. But there is a difference here. Both are optional. See, it is not compulsory for you to approach the proper officer or provisional assessment, or for advance ruling, it is at the option of the registered person. Scope. Provisional assessment is a very narrow scope for provisional assessment, where only the scope is for value and rate of goods. So if you have any doubt on value or rate of goods only, you can approach the proper officer for provisional assessment. For advance ruling, the scope is much wider. So you can have classification, you can have time of supply. So the scope for advance ruling is much wider. Then which cases can approach provisional assessment? Provisional assessment where it is when you have to get the rates or get the value urgently. So it's an urgent basis you want to assess the tax. You may approach the proper officer for provisional assessment. Advance ruling, it takes its own course of time. Fees for provisional assessment, there is no fees. Advance ruling, there is a fees. And what is the redressal mechanism? For provisional assessment, it is a normal appellate route. So you can file an appeal with first the joint commissioner, then the tribunal. Whereas for advance ruling, it has got an appellate advance ruling authority. And if that also is not happening, then you can have a writ in High Court. So this is the basic difference between provisional assessment versus advance ruling. So we have covered self-assessment, which you have to assess yourself, and provisional assessment if you have a doubt on what is your value of goods or what is your rate of tax.